Our financial system is extremely complex and interconnected, and Bear Stearns participated extensively in a range of critical markets. The sudden failure of Bear Stearns likely would have led to a chaotic unwinding of positions in those markets and could have severely shaken confidence. The company's failure could also have cast doubt on the financial positions of some of Bear Stearns' thousands of counterparties and perhaps of companies with similar businesses. Given the exceptional pressures on the global economy and financial system, the damage caused by default by Bear Stearns could have been severe and extremely difficult to contain.
Have set off a firestorm of debate. They also raised a number of important questions that warrant our consideration. Was this a justified rescue to prevent a systemic collapse of financial markets, or a $30 billion taxpayer bailout, as some have called it, for a Wall Street firm while people on Main Street struggle to pay their mortgages?
How do we continue to look at struggling homeowners in the eye when we pull out all the stops to help a sinking ship on Wall Street, but homeowners are still adrift at sea, drowning in foreclosure? The Bear Stearns crisis reared its head, and it was solved in a matter of days. The foreclosure crisis has been going on for a year with no end in sight, and both pose, I think, significant, if not equal, threats to our economies.
The focus was not on this specific institution, but on the more important strategic concern of the implications of a bankruptcy. The failure of a firm at that time that was so connected to so many corners of our markets would have caused financial disruptions beyond Wall Street.
And Mr. Alan D. Schwartz, the President and Chief Executive Officer of the Bear Stearns Companies.
We would do everything we reasonably could to try to prevent the systematic damage of the Bear Stearns failure. Bear Stearns would have failed without this effort, and the consequences could have been disastrous. The idea that a Bear Stearns fallout would have been limited to a few Wall Street firms just isn't so. People all over America, union members, retirees, small business owners, and our parents and children are now invested in the financial system through pensions, 401ks, mutual funds, and the like. A Bear Stearns bankruptcy could well have touched off a chain reaction of defaults at other major financial institutions. That would have shaken confidence in the credit markets that have already been battered.
Find a party willing to acquire Bear Stearns. Thank you, Chairman Dodd, Ranking Member Shelby, Senator Reid. Before unfounded rumors began circulating in an already precarious credit market, leading to the run on Bear Stearns, the company had adequate capital and liquidity and a book value of approximately $12 billion. Facing the dire choice of bankruptcy or a forced sale under exigent circumstances, we salvaged what we could to avoid wiping out our shareholders, bondholders, and 14,000 employees. I think that when people examined our